Hold on. What if I told you there's a stock that just secured final federal permit approval expected in early 2026 for Wheeler River, one of the world's highest-grade undeveloped uranium projects with 109 million pounds of indicated resources, pioneering the first in-situ recovery uranium mine in Canada's legendary Athabasca Basin, where grades average 2.3% compared to global 0.1%. Signed community agreements with 7 First Nations and Métis groups, removing major permitting obstacles. Closed an $18 million land acquisition from Sky Harbor, consolidating the entire Wheeler River area. Raised $345 million in convertible notes, plus holds $720 million in cash and uranium inventory, positioning them to self-fund construction, and just achieved first production at McLean North Mine, producing uranium at $19 per pound cash costs. Trading at $4.31 with a $3 billion market cap, Denison has transformed from explorer to near-term producer, with construction targeted to start mid-2026 and first yellowcake delivery by mid-2028. Analysts have price targets ranging from $3 to $5, with some seeing $6 plus if uranium prices hit $100 per pound. Could this be the ultimate Canadian uranium development play on the verge of production? Before I dive into why Denison Mines might be the most undervalued uranium developer in Canada right now, and trust me, the timing on this couldn't be better, welcome back to Smart Investing. I'm laser-focused on finding world-class uranium and nuclear energy opportunities in the Athabasca Basin and beyond, especially companies approaching production with de-risked permitting and world-class geology. If you want exposure to the highest-grade uranium deposits on Earth with near-term production catalysts, you absolutely need to hit that like button and subscribe right now. You don't want to miss what's coming. Let's get into it. The company I'm analyzing today is Denison Mines Corporation, ticker symbol DNN on the NYSE American Exchange and DML on the Toronto Stock Exchange. This is a uranium exploration and development company with a $3 billion market cap, headquartered in Toronto, Canada, and they're absolutely laser-focused on Saskatchewan's Athabasca Basin, which is hands down the highest-grade uranium district on planet Earth. Now here's what makes Denison incredibly unique and frankly exciting right now. They own a 95% stake in the Wheeler River project, which hosts 2 massive deposits, Phoenix with 109 million pounds indicated at 2.3% grade, and Gryphon with additional high-grade resources. Phoenix will be Canada's first in-situ recovery uranium mine, which is a game-changing, low-cost, environmentally friendly mining method that's never been done before in the Athabasca Basin. They've spent years de-risking this project, and they're basically at the finish line now. Beyond Wheeler River, Denison also holds a 22.5% interest in the McLean Lake joint venture, which includes the McLean Lake Mill and the McLean North deposit that just started production in 2025. Plus, they've got a 25.17% stake in the Midwest deposit and 70.55% interest in the Waterbury Lake property. They're not just a one-trick pony. They've got multiple world-class assets, all in the same legendary mining district. This is a serious, well-funded uranium developer on the absolute verge of becoming a producer. Currently trading at $4.31, analyst consensus price targets range from around $3 to $5, with an average near $3.60, though several analysts have recently raised targets, with Canaccord going to $5 Canadian and Raymond James hitting $5.05 Canadian. Now, I know those targets look lower than the current price, but here's the critical context. Those were set before recent major de-risking events. The bull case that gets me genuinely excited sees $5.50 to $7 over the next 18 to 24 months, driven by federal permit approval expected early 2026, construction commencement mid-2026, uranium spot prices pushing toward $90 to $100 per pound, creating massive leverage for developers, successful ramp-up of McLean North production demonstrating operational capability, and Wheeler River's exceptional economics Phoenix with after-tax NPV of $1.5 billion at $65 uranium prices. If Phoenix hits first production mid-2028 as planned, with 7.7 million pounds annual capacity at all-in sustaining costs under $35 per pound, you're looking at a cash flow machine. The bear case risks include permit delays beyond early 2026, the Peter Ballantine Cree Nation judicial review creating legal uncertainty, construction cost overruns from the $600 million capital estimate, uranium prices correcting below $65 per pound, or technical challenges with first-of-its-kind ISR technology in the Athabasca Basin. Downside could be $2.5 to $3 if multiple headwinds hit simultaneously. But honestly, the risk-reward here looks extremely favorable given how far they've come in de-risking this project. Denison Mines owns Wheeler River's Phoenix deposit with 109 million pounds at 2.3% grade. That's 23 times higher than the global uranium mining average. This will be Canada's first in-situ recovery uranium mine in the Athabasca Basin, using proven technology from Kazakhstan and U.S. operations, but applied to world-class grades for the first time. The 2023 feasibility study shows after-tax NPV of $1.5 billion with 57% IRR at $65 uranium, producing 7.7 million pounds annually over 14-year mine life at $34.55 all-in sustaining costs. With $720 million cash position from the August $345 million convertible notes raise, plus existing uranium inventory, positioning them to self-fund construction, and just achieved first production at McLean North Mine, producing uranium at $19 per pound cash costs. So there you have it, Denison Mines at $4.31, Canada's highest-grade undeveloped uranium project at Wheeler River with 109 million pounds, federal permit decision expected early 2026, construction start mid-2026, first yellowcake delivery by mid-2028, $720 million in cash to self-fund construction, and already producing uranium at McLean North at $19 per pound costs. This is the ultimate near-term Canadian uranium production story. What's your take? Is the permit approval already priced in, or is there significant upside when construction actually starts? Drop your thoughts and analysis in the comments below. And hey, if this deep dive helped you understand Denison's transformation from explorer to near-term producer, do me a solid. Smash that like button and subscribe to Smart Investing for more Athabasca Basin uranium deep dives. Thanks for watching.